Hey there, traders. It's the weekend after the close on Friday, October 11th, before the open on Monday, October 13th. Last week ended with headline jolts, trade tensions reignited, gold popped above 4,000 US dollars, and markets felt the tug of safety flows. Today, we're going to start fresh. We'll break down overnight cues, we're going to recap the take texture, dig into macro crosswinds, map where rotation happening, and walk through the 3 trade setups you can lean into the open going into Monday. So traders, let's punch through the noise. Firstly, overnight and futures check. Taking a look at our indices on the right here, you can see that after the close on Friday, we are substantially down. So we are seeing a red across the board here. The Dow closed down around 2% at 45,479.60 cents. The Nasdaq also down around 3.5%, substantially to $24,221.75. The Russell, the biggest loser, down over 4% to $2,371.08. And the S&P also down almost 3% to $6,552.52. So after weeks and weeks of green, we saw substantial losses on Friday. Alongside those losses, gold continues to command attention. Though it dipped slightly on profit taking, it is still above $4,000. Broad markets ended last week after tariff threats rattled sentiment. So we've been hearing about tariffs once again, and it is scaring the market somewhat. So we begin the day in a balance, bull lean, but every bounce will be tested. Now we're going to do a tape recap and market tone. The index move lacked breadth, strength concentrated in a few big names, visible here on the right. Gold surge caught capital allocating to hedges, not just momentum. Risk assets absorb tariff shockwaves, but internal divergences remain. Volume and leaders outweighed volume and laggards. This is a market that wants selection over speculation. Our takeaway then today, traders, we should trust structure, not hype. As always, stay patient and follow the graphs. Now let's do our macro crosswinds and themes. Yields remain the talk point. If yields back off, growth gets air. If yields rise, defensive steal the show. Then tariff and trade risk is live again. Gold's narrative, the metal is signaling persistent hedging flows. Some retracement, but underlying demand is intact. Data gaps and shutdown risk. Many data releases may be delayed or scaled back due to the shutdown. That adds opacity to the decision-making frame, something to keep in mind. I didn't want to leave that out. It is something we need to consider and be aware of. And lastly, inflation whispers and valuation tension. Many are asking how far can multiples stretch before they crack under input cost pressure. Alright traders, our rotation and flow, as discussed, a lot of money is rotating into gold at the moment. That's telling us that traders are hedging. Let's talk about tech, AI and semis. They are still the directional engine, so we need to watch how they behave. Quality, defensive and yield plays. Names with strong cash flow, long leverage and stable outlooks will attract rotation if growth wobbles. Commodities and metals. If gold holds, miners get flow. Weak crude keeps energy volatile. Cyclicals and industrials only engage if macro tilt turns positive. And the breadth check. If we want confirmation from small and mid caps, if they don't step in, today's strength may be shallow. Alrighty then, traders. Let's have a look at our 3 trade setups going into the open on Monday. The first is Micron, our memory and semi momentum. Ticker symbol MU. We have taken a look at micro last week or the week before. Why, you ask? While AI and data expansion still underpin memory demand, Micron often leads semi rotations. So our trade signal, enter long if MU opens above its pre-market high and holds that run, especially if SOX and semi-ETF show strength. Fade option, if MU spikes early but fails its VWAP retest, short back into that exhaustion. Profit, partial scale early, trail remainder under structural support, and stop under the opening range low, failed retests. Alright then, secondly, we're going to take a look at Procter Gamble, ticker symbol PG. Why? Well, this is our defensive consumer staple with pricing power. In uncertain markets, people shift to essentials, of course. So traders go long if PG opens clean and holds strength, especially if staples and defensive ETFs are bid. Profit, take moderate gains, keep a lean runner if flow holds, and exit if PG loses VWAP or defensive names crack. Alright traders, I'll throw it. And last stock we're taking a look at is Newmont, ticker symbol NEM, and this is our gold for hedge exposure. Why? Well, if gold remains a core theme, miners get leveraged exposure. Trade long if gold futures remain firm and NEM starts to open green. Profit, scale into gains, lock part early, and exit if gold softens or NEM falls below key support. Flatten. Alrighty traders, our tape signals and execution filters. As always, first VWAP retest across ESNQ equals directional signal. Breadth by 10 a.m. Eastern Time if advances dominate, trend potential increases. Liquidity zones, opening range, previous high lows and pivot levels will act as magnets. And volume must confirm traders, don't trust weak breakouts. Alrighty then, I'll wrap up and call into Monday. We're threading a needle. Tariff fear, gold strength, yield sensitivity. MU gives you tech memory upside, PG gives you a recession hedge, and NEM gives you hedge exposure. Trade structure, honest stops, watch the tape. Let's see who owns the open on Monday. I'll see you at the bell. I hope you found this video useful. Thank you for taking the time to watch and listen. And I will see you again very, very soon. All the best. Take care. Bye for now.